So you clicked on this video because you would like to know how swapping one crypto for another is taxed. I'm a CPA and I'm here to break it down for you in less than 5 minutes. Let's go. So the first thing to keep in mind is that whenever you are purchasing crypto with cash, with fiat, this is actually not taxable. So we made a video on buying and selling crypto. We'll link that below, the tax implications. But whenever you're buying crypto with cash, it's not taxable. Now, when you're swapping one crypto with another, or some might view it as buying crypto with another crypto, this actually is taxable and introduces some nuance, which is what we are covering today. So going over the scenario here, we initially bought one ETH with cash, $2,000 in cash in 2022. So that's our cost basis on the ETH. Then we swapped that same ETH for 0.029 Bitcoin, when Bitcoin was worth $100,000 at the time in 2025. So the fair value of this Bitcoin, of this 0.029 Bitcoin, is $2,900. Okay, so the way that you calculate your capital gain or loss when swapping one crypto for another is you take the fair value of what is being received minus the cost basis of what's being disposed. So in this instance, we are receiving $2,900 worth of Bitcoin. So that's the proceeds, that's what's being received. And the cost basis of what's being disposed is this $2,000 here. So that leaves us overall with a $900 long-term capital gain. Now, the reason the capital gain is long-term is that we made this swap in 2025, meaning that ETH was held for over 12 months. Whenever you hold a crypto for over 12 months and then dispose of it, it's actually a long-term capital gain or loss as opposed to a short-term capital gain or loss. Long-term capital gains have much better rates and very, very favorable. So it's either 0, 15, or 20% depending on your overall income, whereas short-term capital gains, they are taxed at your ordinary income rate. So just like your W-2 job or your salary might be taxed, that is how short-term capital gains are taxed. So overall, this scenario is pretty simple. The thing to keep in mind here is whenever you're swapping one asset for another, it is the fair value of what's being received minus the cost basis of what's being disposed, and that is your overall capital gain or loss. And by the way, my name is Justin. I am the head CPA at the crypto accounting firm CountonsheepYT, and we solely focus on crypto tax preparation. So if you work with TurboTax or a traditional tax preparer, that's perfect. That's where we come in. We handle just the crypto portion of it, filled out, ready to file, and then we pass that back to you so you can either plug it into TurboTax or hand it off to your tax preparer who might not necessarily know crypto like we do, and then you're good to go. And if you enjoyed today's crypto tax lesson, make sure to follow for more videos like this. And as you know, the crypto regulatory landscape is constantly evolving. So if you want help navigating the new guidance and strategizing around the new guidance, definitely follow for more. We are going to be releasing videos as news comes out, and we're going to be helping you navigate the new environment. So make sure to subscribe and turn on the bell notification for more.